Hello there, welcome to the week ahead. But before we start, history was made today. The British public voted to leave the European Union. As a consequence, David Cameron is to stand down as Prime Minister. The pound plunged to a 30-year low. The FTSE was down over 4%. The Bank of England is said to be monitoring developments. Nicola Sturgeon, she plans another Scottish referendum as well. And Jeremy Corbyn, he faces calls to resign from his own party. So it's all going on. It's been quite a week. And next week, as a consequence, is very difficult to predict in terms of volatility. But there are other data releases going on, so we're going to kickstart with Monday and let you know what to put in that diary of yours. So German retail sales and US composite PMI. Tuesday, we've got France consumer confidence, got lots of data coming out from the US, including GDP. On Wednesday, we start with Japan retail sales. We've got UK stats as well, Eurozone consumer confidence, German inflation, and again, lots of US stats that we're going to analyse in a moment, and oil inventories. On Thursday, UK consumer confidence, Japan industrial production, retail sales coming out from Germany, and France inflation. GDP from the UK, Eurozone inflation, and US initial jobless claims. On Friday, again, we start in Japan. Lots of Japan stats coming out to kick-start the day. China stats too, so it's an Asia-heavy day. PMI stats coming from the EU region, Eurozone unemployment, and we finish with the US too. As I mentioned there, lots going on from the US. We've got Chris Beecham just here. We're going to welcome him into the studio. Hello to you. Well, first of all, before we dive into that, what a week.
It's been a remarkable week.
Where do you even begin to explain it?
That's the tough thing, really. If you'd said at the beginning of last week, this is what we're expecting, I don't think anyone would have believed you. In fact, until about 1 a.m. this morning, no one would really have believed you. And yet here we are. Losses across the board for global markets, really. Gold soaring, Bitcoin up. That's always a sign of crisis in markets, really. The FTSE off the lows, so maybe the market is yet to decide really how bad this is. But clearly we've had a momentous time. I think it sets the stage for what we get over the next few months. Now, as we know, there's plenty coming through next week in terms of economic data. But how much does it count? It's difficult to say, really. You'll sort of get this sense of, oh, there's German data here and there's US data here. But there's also this going on with the Brexit debate and who said what from the Eurozone. We should hear from Germany and France by Monday. That's the key, when Angela Merkel seems to be getting some sort of coalition together to work out what the response is. So that will dominate the debate. But nonetheless, if we were looking, say, at what we're doing for the US, that's still in focus. Now, you could argue that Brexit has essentially scrubbed a Fed rate rise in 2016. That's not a bad argument to make, but we have got the final real GDP. We've got other numbers coming through from the US next week. So if we look to something like the dollar index, you've seen the flight to safety moving through today. That's that big upward candle that pushes us outside of this longer term downtrend. So while we've had these big moves and they can reverse, you might start to see a case for why you might continue to see strength in the US dollar for the time being. If you switched over to what we're seeing in the euro as well, that's clearly been hit by a degree of risk aversion, down 2.8% today, but off the lows. I suppose the big question is this rising trend you can see there from that December low that held all the way through until last night, and now we find ourselves pushing back to 110. Do we see parity against the euro? A lot of that will be determined by what we see from data, I think, over the next couple of weeks.
And there's been lots of noises coming out of Europe as well, because we've had Marine Le Pen talking about a referendum there, the Netherlands too, Italy potentially. So it's this domino effect that could affect the euro and just the Eurozone economy as we know it. All right, shall we move on? Let's go for corporate data, shall we? We're going to run through them just now. There's lots of tech companies, lots of solution companies as well. But as we were saying, really, the Brexit vote, it's happened, but it's still going to dominate proceedings, no doubt. So we've got IS Solutions coming out. It's a tech marketing company. We've also got Pavere as well, an environmental tech company, and Hodge Tech as well, construction company there. Carpetright 2 needs no introduction. That's starting on Tuesday. Northgate as well, as I say, another software tech company, that one, and an online supermarket giant as well, Ocado, and Carnival as well, a cruise ship company, and Nike. I'm sure you've heard of that one, the sports retailer. On Wednesday, we've got a bus and coach company, Stagecoach there. We've got a pub retailer, Green King, and Dixon's car phone as well. Actually, the boss of this company has said that post-Brexit, because of the pound, the weakness of the pound, we could see the prices go up in his particular store. We've also got McCarthy and Stone there, retirement home builder, Buzzell, again another sourcing distribution company. They're very heavy this week, and Monsanto as well, the agriculture company. On Thursday, oil and gas giant John Wood Group, Serco, again another outsourcing company, Tullow Oil in there as well, a wine producer too, Constellation Brands, and Trinity Mirror. That's coming up on Friday. So Friday is a rather quiet day. That's actually where my journalism career began many moons ago. Okay. What catches your eye then here? Because I did mention Dixon's car phone. That's going to be reporting earnings. What can we expect from that one? That
will be an interesting one. I think they've seen improvement in the UK retail sector over the last few months, but of course that will be backward looking. And now we want to know what they think about for the next few months. Clearly, if they've drafted their results statement, and they most likely have, you can probably hear the sound of furious redrafting in Dixon's car phone right at the moment. They will want to try and carefully hedge themselves. They can say, yes, we're seeing good trading here, but what does it mean? What does it mean for some of our operations outside the UK? So that's going to be an interesting one. If you look at the chart, you could probably put this chart up for almost every stock in the FTSE today. You've seen it opening down 40% this morning, down at £2.50 a share. Now we've recovered to stand down just 13%, and obviously that's in context, just 13%. Still a big move down and well below the lows. What were the lows? Around £4 a share. Dixon's car phone, they're still doing well. The merger seems to have gone well, and I think that's an interesting company to still keep an eye on, even in the light of the Brexit vote.
All right, Chris, is there anything else that catches your eye in terms of corporate news next week?
Well, if we looked at another one, Tullow Oil will be one definitely to keep an eye on, down 10% today, again off the lows. Oil has been on a fantastic rally the last few months. It's rescued a lot of these oil companies. Yes, they still might be loss-making, but clearly with oil, well, it was at $50 last night, it's now down today, but that's much less of a loss than you would have seen just a few months ago. So maybe the picture is improving here. Certainly Tullow Oil shares have rallied along with the broader market, and I suppose now is a bit of a crunch point to say, do you think this is the dip in the share price? Do you think the earnings might be better coming up this week, or is it the beginning of something serious? I think it's all to play for in the next few days with a lot of shares on the FTSE, but Tullow Oil could serve as a good example here. If we get back about £2.40, maybe we do see a continued recovery.
Okay, Chris Beecham, thank you very much for all of that, and thank you for watching as well. That's a wrap from us as we wrap up this week, digesting the fact that Britain will leave the EU in what the Leave campaigner Boris Johnson has hailed as a glorious opportunity. Have a great weekend, and we'll see you on Monday for more market analysis here on IG.